What's goody?
Hey,
Happy New Year.
Happy New Year.
Oh, I'm
I'm
loving
a
the fit,
little,
by the way. We went black and white. Oh, what's going on here? What we sipping on?
that is just some sparkling water from good old Trader Joe's.
Oh, okay. All right. Look, next week, or next time, I'm gonna come back with my Metropolitan Market sparkling water. Look, listen. It's a battle that's got started. So Jolene is on her Trader Joe's, and I'm on my Metropolitan Market. It's gonna get
Mhm.
interesting in 2025. Straight up, coming off of the top of the year. I was gonna say something else as it pertains to how 2025 started, but I felt like that was in bad taste. So I'm just gonna say it started off very, very interesting.
Yes, very, very, very interesting.
All right,
Um,
so but let's get to it. Like let's get it popping. So first things first, you know who we are, right? Okay. If you don't know who we are, what's good, everybody? I'm Mark Monroe, accompanied by my wonderful co-host, co-producer, co-creator, and all things galactic. Give it up for none other than the wonderful.
it's your Landry seeing the place to be. What does it, cousins?
Okay, and so today we are doing something a little different since we're starting off in 2025. I mean, still same etiquette as it pertains to some of the elements that you know and love here at the Come Up series. If you're new, then this is going to be completely refreshing. We're going to call this the Roundup. And so we're rounding up a lot of the things that have transpired over the past set of weeks,
Mm-hmm.
testing out the name, subject
Yeah,
to change for sure,
that.
because Roundup can also have some type of interesting connotations to it.
Mm-hmm.
But yeah, so we're just literally just giving you what our thoughts are over what's been happening, and then also try to prepare you for what's coming forth. So if you know Come Up series fashion, you know how we get down. We always like to give you nothing but straight up value from the start to the finish. So grab your pen, grab your pad, grab your iPads, whatever it needs to take notes and all those other good things,
My
because we're
iPad.
getting started. You got your iPad?
No, I don't. It's dead.
Like you can call it, right? Or is it just dead?
No, it's dead. No, it still works. It just
I
needs to
was
be
like,
charged.
I
Sorry,
was
sorry,
like,
sorry. It just needs to be
whoa.
charged.
Okay,
I've
well,
been coloring on it.
hey, it's very therapeutic to
Hella
color on.
therapeutic.
Look, that I forgot what it was. I think it was like pixel something, but you could like literally do like the color book. So it's
Yeah,
lit.
I like it a
It's
lot.
lit.
I do Zen color thanks to a good friend.
Ah,
It's color by numbers. I really be feeling like I'm doing something.
okay. Well, look,
Mhm.
whenever you want to post up your the pieces as it pertains to finished product, I would gladly love to see it. I'm sure the
In a
rest of the
private group
world would
chat.
love to. They're like, yo, y'all see this?
Right.
Okay, so we
Okay.
got a lot to get into today,
We do.
Jolene.
We do.
And so we got a lot to jam pack into today's episode. It's fairly the weather's doing decent here on the West Coast. For
Mm-hmm.
the cousins over there that are struggling in the ice storms, and then also like apparently it's coming down to the south. So look, bundle up, get your generators going. Look at Generac stock. That's all I had.
Okay. So I'm gonna be looking at multiple screens, FYI.
Okay.
Oh, okay. So anyway, back to what we were talking about. So Mark, okay, Happy New Year and all that.
Yep.
But is it a Happy New Year? I
I
mean,
mean, it's starting off a little. Look,
yeah.
I will say this though. I want no smoke with Gen Z. I want zeros. I'm just putting it out there. I don't want no smoke with Gen Z. Look,
Okay.
we can say whatever we want about them, but they've already proved
Mhm.
that they're about it. They're shooting 1 for 2 as it pertains to like what they've been aiming towards.
Mhm.
So 50%, look, y'all can have it. Look, just be careful out here.
Okay. So, um,
Are we looking
sorry,
at economic landscape, or are we looking at financial markets first?
let's okay, so let's just kind of like lay it out. Let's talk
Okay.
about the economic landscape. Just, just a little something something because we talked about it at length last year.
Okay.
And that's crazy to say last year. And then let's get into just some I guess overall, market stuff, something brief, a little something. But then we have to talk about CES since
Okay.
that's like the big thing. So,
Okay.
a little geek out session for you, sure, sure.
Okay. Uh,
And then also I want to get into also, like some global economic factors, geopolitical stuff. Um, but I think we should do CES last and just talk late, like set it up and then see what I'm saying.
okay. First things first, I need to run a quick software update for my LLMs. All right, I'm here. We're
All
here
right.
now. All
Right.
right, so economic landscape as it pertains to 2025. So we walked out of 2024, Jolene, with
Mhm.
I mean, well, the Fed had started to cut as we came close towards like mid-year going into the close. I think we had
Mhm.
quite a few cuts, and then after that, I think in the December cut they said, "Okay, we've given you your cuts, expect about 3 next year, but we're going to be
Right.
watching to see what the data says." We started to see inflation get a little bit inflation currently right now is like that, like where everybody's like been hanging out at the house, and it's
Mhm.
like, okay, everybody knows that, like, okay, hey, like the host is starting to get tired,
Yes. And it's
but you
like,
got but inflation is that one friend that just wants to stick around as if they don't want to leave.
right.
Like,
It's like,
and
so what
they're
you
not
been
picking up on
to?
any of the subtle clues, like, hey, it's time for you to leave, it's time for you to go home. That's honestly how inflation is starting to feel right now. It's just becoming stagnant in the sense of it's just not trying to go anywhere. Oh, okay. Well, look, you over here changing
Well,
glasses, and just like
sorry.
the Golden Globes over here. All right, host.
No, it's because like I'm adjusting to the lighting and I
Okay,
can't see my screen as well. So I had to pick which that's why. But anyway.
gotcha. So
No, I'm
now we're
blind.
into. No, you're not. No, you're not.
No,
We
I
know
really
that.
am blind. No,
Really?
like seriously, I can't see without glasses. I mean, I can see something, but
I'll
not.
save that for a Scooby Doo reference later. But
Okay. Anyway, back to.
so 2025, here we find ourselves now,
Mhm.
and again, inflation is still around. We
Yes.
just saw that services PMI was decent, but it's not. It's normal. The normal number is about 56 is the typical read. We're also seeing the 10-year. Also, the yield is starting to creep up. So for those of you that just need a quick crash course, when you see the 10-year yield go up, so for example, if it goes from, like, let's say 4.4 to 4.5 or 4.6, then that means that essentially that people are selling off their bonds, and ultimately the yield is ultimately the potential profit as it pertains to what you can lock in at. So you're seeing it creep higher, and so I think that that's putting pressure on US equities, because now the 10-year is looking very attractive in some cases as it pertains to receiving this percentage return over
Mhm.
this span without the amount of risk. So, but the thing is, you also have to take into consideration is the fact that we still expect 3 rate cuts from the Federal Reserve this year, which means that could also put a cap as it pertains to what that potential rate that you're going to lock in under a 10-year bond or whatever treasury bond or whatever treasury bond yield that you're going to acquire. So, which really puts it into perspective that you have to ask yourself is, if it's, let's just take an arbitrary number. Let's say 4%. If 4% is the number in which that you say, okay, hey, if I'm putting in and allocating towards my portfolio and saying that this is the expected return that I'm supposed to be getting over this period of time for this year. So now if I'm looking at that, okay, do I want to play the S&P 500 that just came off of 2 consecutive years of over 20% growth year over year? Or do I want to try my hand elsewhere? And if that's the case, it's like, now that seems more riskier than, say, for example, a treasury bond yield. And so those
Mhm.
are the things in which that we're seeing, and I think that the pressure that we're seeing that's leading up to the top as it pertains to the yield could pressure the Federal Reserve into doing more rate cuts rather sooner than later.
So,
So
wait.
go
No, go
ahead.
ahead. No, finish your thought.
So with that said, that's putting a lot of the questions
Mhm.
up in everybody's minds, and especially for those that are writing theses for the S&P 500 as it pertains to their price targets. those who are looking at what they're expected as it pertains to earnings growth this year, when it looks at as it pertains to overall market, overall economy, you take all those things into consideration and you ask yourself, do I really want to try my hand at this? Because on the other side of the token, some people are expecting a three-peat in the S&P 500. So 3 consecutive years of solid sustained growth. Three-peats are very tough.
I was gonna say, is that asking too much?
I mean, it could be. I mean, it very much so could be. I mean, again, it just depends upon what the earnings growth looks like. So, for example, if your expected return in the S&P 500 is, let's say earnings growth is at 11%, then okay, then you might be able to justify that. Might be. But you also have to take into consideration the economic standpoints, which we're probably going to get into, like, for example, consumer credit, also real estate.
Right.
All those other things. Like, you're also seeing mortgage rates currently sitting at 8%. So nobody's enticed to sell a home to go buy another home right now. So
right. So people are pretty much staying put. So it seems like the name of the game really is kind of like this leveling, like just steady.
Yeah, for now. I mean, right now, what you see, given that we're at the beginning of the year, I kind of mentioned this at our last episode going in 2024. I said, as we go into the beginning of the year, you're probably going to see rebalancing take place.
Right.
So, which means that essentially the people are going to start trimming some of their winners. They're going to start taking some profit. And it's going to kind of suck because it's like, okay, hey, like, let's say I take profit now, but then there's still more room for my winners to run.
Stick to your trading plan.
Look, you got to stick to your plan, and money managers are the best at sticking to a plan. Same as like any of the other institutional money, as it pertains to whether it's an institutional hedge fund or whatever you may have it. They're definitely going to stick to their plan. So why they're going to stick to their plan is because they got customers that they have to appease. And so essentially that's what you're kind of looking at as it pertains to what that rebalancing looks like, just to balance out the portfolio so that way you don't look so vulnerable in one specific sector. You have to take into consideration 10 stocks literally moved the entire S&P 500 over the past year. And you can also possibly sprinkle it in also for the year before that. So with that being said, it's like, people may be looking at it and saying it may be a little bit more riskier to be in these positions as it pertains to right now. But do they abandon them? We'll get into that in a little bit.
I mean, I can see some shaving off for sure.
Yeah.
But it is kind of like you want to take whatever your winnings are, right? But then at the same time, you may want to leave a little something there just in case it's going to continue to be a track star, a runner. You know what I mean?
Yeah. I mean, but again, it's like, when you had companies that have gone on multiple years of 200% growth in their stock, everybody's kind of like feeling the same thing. Like, oh, this party is great. But at the same token, all it takes is for that person to do that first yawn. And yawns are contagious. And now everybody's just like, I see that green light over there at that says exit. Everybody's looking at it.
But then you get caught on your way out. If you make up your mind you're gonna go out, then you get caught up.
Then another song plays, be like, oh,
that's my pick. You know, so you don't leave the party.
Listen, you never know. So again, it's just something in which that everybody's probably like that cautiously optimistic that like, okay, hey, well, where is it that we're going with this? In my particular opinion, here's my thesis. I believe that we run up going towards the middle of the year. So we have a very good run going up to the middle of the year. We'll probably kiss 6,900, maybe 7,000. 6,800 just to be, as it pertains to a simple base case. Mid bullish is 6,900, 7,000 is like uber bullish. But then after that, it's like we might have to watch the party die after that.
Well, so I was reading that the mid-cycle like periods historically yield about a 14% like gain for equities. So is that taking the numbers that you just said, is that taking that into consideration? Okay.
Yeah.
All right.
Yeah. So I guess to also talk about other economic factors, things to look at, like, well, are we talking about like domestically or are we talking about globally? Like
we're talking about it all.
Okay. So unemployment is something that people need to pay attention to. Now, I want to connect some dots for y'all. So
Okay.
you've probably been hearing in the news about H-1B visas now coming back into the foray, but whereas back in 2016 they were against H-1B visas. Interesting as the world turns.
Right.
But the interesting part to that is that looking at the talent and where is the talent going to come from, right? So of course everybody would automatically assume just India, but also you have a growing population that's over there in China that also is like going through this thing where they're kind of like let it rot. It's like this let it rot mindset and campaign amongst Gen Z, like Gen Z population, because of the fact that the working habits and everything else as it pertains to what you gain, they're experiencing some of the same issues. Their youth unemployment is, I think, between 21 to 27%, which
Hi.
is astounding.
Yeah.
And of course, China is trying to figure out ways in which that they can resolve those issues, but I don't think that it's really landing because of the fact that there's a lot of folks that have disdain for the government, and on top of that, a strong disdain for that hustle culture that takes place there. So
Hmm.
you could possibly be seeing a lot of folks that are very much so enticed
Like ready to
to
come here.
literally go to come to the US under H-1B visas and utilize those degrees, because here's the problem. Over there, a lot of them aren't using those same degrees in which that they studied for, and on top of that, they're not making as much as what they could. Now, for those of you that don't understand H-1B visas, to bring in somebody like, and I've had to do this before, to bring in somebody under H-1B visa, you're not paying them the same rate that you would pay, say, for like, let's say if I need to hire a software engineer, if
Hmm.
and let's say that my software engineers make 125 a year or 135 a year. Now if I bring in somebody under H-1B visa, that's going to be way higher than what is it that I'm paying my actual software engineers. Why? Because what you're telling the US government is that essentially that you can't find any other talent versus this talent, and that essentially that's where you're at. And I think that we're probably running into that issue slightly because of the fact that there's a lot of jobs that are out there, and when you look at the talent pool, and then on top of that when you look at who's applying and then also who's not applying, well, a lot of those jobs just go unfilled. But at the same token, and those jobs need to happen, so that kind of forces a company into a certain situation where now they have to choose to get creative. And that's the reason why you see a lot of times they send the work offshore, because they know that there's folks out there that will take on the job. So what you do now is, instead of sending the dollars outside of the country, you open up H-1B visa to keep those dollars inside the country. Though that it's interesting because the folks that are coming from outside the country just to live
There's
here,
been
but
money back.
all that. But there's an economic benefit, right? Because though that
Mhm.
you're paying them X amount, it's not like they're going to be buying their groceries in their home countries and just sending all their groceries here in the US. They're going to literally go after the businesses that are here and literally spend their dollars in their geographical locations, which ultimately increases GDP and stimulates the economy.
I wonder how much
So
money is sent back home, just on average.
as it pertains to like remittance, now that's a question that we would have to look into. But essentially, when you think about it, like you can definitely, and for those of you that they're like, okay, hey Mark, how do we look at that? Okay, go look at the time in which that we saw H-1B visas like literally cut, and then look at where the growth. Look at the growth of the U.S. economy. Look at how we were growing and everything else, how industries were booming. And then after the H-1B visas got cut, look at the productivity and look at how it significantly dropped, and how like look at the quality of also a lot of products, a lot of services and everything else. You can easily see the shift as it pertains to when the talent was there versus when the talent is not there. And I think that that's a major issue.
It sounds like in some of these certain markets in the US, when we
Mm-hmm.
have there's going to be a problem if we
Yep.
have certain labor that's cut, in agriculture, and then we have labor through the H-1B visas that are or H-1B visas that are cut,
Mm-hmm.
um, well, cut for right now, but reintroduced on the tech side, for example, or
Yep.
other forms of business. It just seems like, well, one, we definitely have to pay attention to that as an economic factor. And the reports come out on Friday, right?
Mm-hmm.
For
Mm-hmm.
markets or for jobs, for the job
Yep.
market.
Yeah, we
So,
saw the job openings were significantly, they were higher
uh-huh.
for December. And of course you can also say like that's like holiday and all this other stuff. So this is going to be an interesting read as it pertains to like moving forward. What do those numbers look like? But as you can see, the jobs have been remaining. Like, okay, there are folks that are hiring. Now, out of those folks that are like truly hiring, I don't know. But I mean, If they're hiring, they're hiring. The question is like, where are you going to get the talent from?
Wait, so we're assuming that the December jobs increased because November increased.
Mm-hmm.
Okay, so we'll have to wait to see what the actual numbers are.
Yeah, because essentially, like you're coming into new budgets, you'll probably see more
Mhm.
massive amounts of hiring that takes place in January versus in December. But at the same token, they probably put those jobs out there in December, just so that
Mhm.
way they're feelers and they're taking in all types of candidates. And then essentially, you start to see like those interviews and everything else take place in January.
Well, they said that the quit rate dropped,
Yeah,
so
because the
less people
economy is
are
getting
quitting.
tight, so you're gonna feel less. You're gonna feel less of a luxury to quit your job when things are expensive and everything else. So yeah,
So that would mean that if people are quitting their jobs and there's not necessarily more coming in, that means that the labor market is just,
tight.
and it's cooling again. So
Mm-hmm.
it
It's
sounds
getting
like,
sticky.
honestly, right, but it sounds like we need H1B1B or H1. I keep saying H1B1,
I
H1B1,
know, I know. H-1B visas,
H1B
yeah,
visas.
they definitely serve a strong purpose. But I mean, majority of the folks that typically use it is tech and finance. I mean, those are
Mhm,
the industries that use it the most. It'd be interesting to see if they use it in other categories, like for example, agriculture, manufacturing, industrial. So it'd be
mhm.
very interesting to see how it plays.
Hmm.
Yeah.
Okay. Well,
Are we on to the next thing, like financial markets?
yes.
Okay.
Now, go ahead.
No, go
I
ahead.
just
I just
no.
said
Okay.
okay.
All right. So, okay, if you're looking at the financial markets, like definitely want to talk about just the stock market performance
Okay.
thus far. I mean, it's January. This is we've had a lot. Like the year started off midweek, so there wasn't like that much action going on.
Mm-mm.
And so now we're here, second week, and this is actually the first full week.
Official week. Well, technically not full because we have an off day.
Yes. So next week will be the wait a minute. Is next week the official or first full
Where we
week
actually have a full week of like,
with no
yeah.
holidays, no federal holidays?
I'm assuming so. Yes, that is correct.
Well, January 15th is MLK.
Dang, we just not getting it.
Do, do we
Well, but I
celebrate
mean
it?
that's
I can't remember we celebrated
I
on the
think
actual
it's now a
15th or
federal
Monday.
holiday. It's now a federal holiday. So
Okay.
either way how it plays.
Well, so today, if we just look at today, we lost. We retracted. So
Yeah.
we
So you're
had
gonna see
gains, but now they're gone.
yeah, you're gonna see some chippiness, but if you look at the overall, like if I was able to pull up a chart, um, you would be able to see that essentially, yes, we had a down day, but if you
Mhm.
really think about it, we're trading within a wedge, whereas like a consolidation, and
Mhm.
essentially, the base trend line, we're pinging that perfectly, and we're respecting it, and then the top line resistance line, that's to
Mhm.
the downside, we're respecting that. So the question is that which side is going to budge first? Are we going to break the top line? And my guess is it seems like we're going to break the top line. There's less risks when you think about it going up to say that we're going to probably break this and probably head up higher. Though there is a chance that we can go down to the downside for sure, but I think that it's going to
Well,
be like this until we get closer towards earnings, and then earnings will truly be the true shake of like where we're at.
well, I was also thinking about just in the context of like volatility
Yep.
and all of the market doesn't like uncertainty.
Yep.
And we do have some uncertainty when it comes to geopolitical tensions, when it comes to exactly what the new administration's policies are going to be, because there's been some back and forth as far as
Tariffs.
rhetoric goes, but we don't know what actually is going to happen until it actually happens.
Yeah. So you're talking about like stuff like tariffs on China and
Mhm,
Canada, and I guess also Mexico.
mhm,
Those things can be very real, and I think that the market has already started to price those things in. So I think the biggest thing that the market hasn't priced in is what does inflation truly look like? Is inflation starting to increase, which will put more pressure on the Fed? Could that signal that the Fed needs to, instead of cut, could they increase? Can they do a rate hike?
Mhm.
Um, Again, those are the things in which that the market is just trying to like sniff out risk, and then on top of that, when you're in the midst of rebalancing, that's what's happening. So when I mean, and like I said, when you're rebalancing portfolios, if you're very tech heavy, then you're going to remove some of that risk, maybe go to cash a little bit, and then also see what else is out there that are good companies to invest into. It's kind of interesting because we've gone through this for like almost 4 to 5 years in the financial market space here in the
Mhm.
come up series, and it never ceases to fail. But I always have to bring it up where it's like, if you're ever watching CNBC or any of these other folks, they always start bringing on certain people to discuss certain parts of rhetoric. And then it's just like, okay, that gets a little long in the tooth. And I'm probably sure that people get tired of hearing them. And then it's just like, okay, hey, we move on. Um, like I said, there's a chance that we could still go to the downside in the sense that it could probably lead to a correction because technically in 2024 we never actually had a full a real correction. So meaning that we never dropped 10% in either the S&P 500 or the Nasdaq. So I expect that to happen this year.
Well, yeah, because we're just talking about a possible three-peat, but only up until like the midpoint. So it would follow that we would have a correction. But I do see when we're benefit consumer discretionary, at least as a sector, and possibly states like consumer staples because of that stability in the job market. Um, and then if we think about, I mean, I know we're not talking about it yet, but I'm just bringing it up now. As far as tech as a sector, I
Mm-hmm.
mean, with all the excitement at CES, it just seems like that would be where potential growth is. It just seems like that's always the driver. Um, with obviously some correction, but it just seems like consumer discretionary and consumer staples would be stable. So not as much growth, but at least stable. And then tech kind of increasing. And I don't know what to make of health. Like to me, health is that sector is a mess right now.
Yeah, like
Given
a
all the
whole
attention.
mess. So you draw up some very interesting points there. And so let's dissect some of those, shall we?
Okay.
So when we look at consumer discretionary, right, we're talking about really Tesla and Amazon. I mean, how Amazon is still classified as a consumer discretionary stock and not a tech stock, beyond me. But okay. Um, and then when we look at Tesla, we see like, okay, hey, like there's been a lot of upside push in the stock, but then at the same token, the like really does the fundamentals support it?
Mhm.
And that's where we're really at that inflection point as it pertains to like when we talk about when we start having the conversation of earnings growth. If we're in single digit earnings growth, then that's not a good look. But funny fact, we expected single digit earnings growth last year, and we ended up in double digit earnings growth. So it's always funny how it tends to shake itself out. Let's see, communications. I think that that's probably one of the best sectors,
Mhm.
given in the sense that with the likes of Google with its quantum. Also, you have players like, I mean, I don't know if Netflix is consumer discretionary or communication, one of the two, but I think that that's actually one of the biggest slept on companies.
They're
Um, I think that they're probably going to be the breakout company also of
Mhm.
2025. Meta as well, which is communication. And then, of course, you have your communication stocks like, T-Mobile and all those other folks that we don't care about. So, again, it could shake very interesting. Of course, you have on the other side, at the tech side, the two juggernauts at Apple and Microsoft. And you have to really think about it. When you get to the law of large numbers, then, of course, single digit growth is inevitable. And then on top of that, slowdowns as it pertains to what your consumer base looks like, and which really points to the question of, are we really focused on consumers, or are we focused more so on enterprise
well, I know,
customers? I
but
know.
your thought is on it.
I can get into it if you want me to.
Wait, no.
Um,
Wait until we have to it's almost there. It's almost there.
yeah, we're almost there.
I'm looking at
Um,
points.
but yeah, so but if I'm being honest, in markets like this, I have yet to see an industry I've yet to see a sector that has outperformed tech. I think that the tech's revenues are just too good.
Mhm.
Their revenues are too good. Their earnings growth is too good. Their scalability is just out of this world. And at any point in time that they can turn on the lights, and essentially it's like, okay, hey, now you're dealing with something that's scalable. Um, I don't know another sector that can literally and and this is why I hate like saying communications and consumer discretionary, because they're all kind of like lumped into each other.
Yeah, there's
Um,
overlap.
yeah. So I mean, I don't see anything that can really like unseat that sector. The only way that you would unseat that sector is only if sentiment itself changes, where everybody wants to go risk off, but it's still not going to stop the companies from being as dominant as they are. Like
Mhm.
that's the thing. Like when you start looking at the winners, like there's true winners that we can all we can look from our eyes and see like, okay, winner, not so much of a winner. Winner, loser.
Mhm.
So, but it's very evident. I mean, look at what's happening in healthcare. Like one small thing, well, not really small, but one event literally sets off a cataclysmic shock to the entire sector.
Mhm.
You know, energy can be an even flow based upon how geopolitical tensions flow, and also in the sense as it pertains to like, you know, production or non-production increases. When you look at retail, very much so built upon the consumer. And so when you look at tech, though, it's like you can either be a consumer or you can also utilize services. And then there's enterprise. Like
So
it's just
three ways,
too. It's
basically.
a three-way diamond cut split. So it's like, how do you beat that? You just I
Mhm.
mean, you can't. You just can't. So unless sentiment changes, then that's the only Achilles heel to the
Okay.
entire, you know, tech sector
Well,
as a whole.
you mentioned dominance, and we're talking about domination in in the tech sector. Hats
Winner
off
take all.
to Nvidia and their
Yes.
92% market share. Good Lord. But Mark, okay, so when CES came, like when I was like reviewing, you know,
Yep.
CES and all the things that happened, as a consumer,
Hmm.
it was lit. Okay.
Yes.
All of the things, like talk about the human imagination. Oh my goodness. So I'm
The
gonna let you.
robot mixed with the vacuum, mixed with the cameras, mixed with it now has arms. Just give me an iRobot. Just take my money.
What would you name your robot?
Either Zazzle or Thomas.
Or Thomas? I'm naming mine Jeffrey.
Oh,
Just off
see.
Jesus. Fresh
Yeah,
Prince.
okay, I feel it. I feel it. See,
Throwback.
I thought
Okay.
about that, but I was just like,
Uh,
you know, can anybody really beat Jeffrey?
no, they can't.
Cannons?
They can't.
Cannons?
Candace to the left of them. Candace. Oh my gosh, that episode. Okay. Anyway, back to the future as we took a moment.
Yes.
Okay, so Jensen was one in his little embossed
He was in
crocodile
his bag.
jacket. Okay, he got up there and really just painted a vision for
Yep.
how AI could look. He gave a blueprint for AI, like as it relates to his company. And I also think, you know, just in general too, but really painting this picture of Nvidia continuing to dominate and be a freaking beast. So, what were the highlights for you for CES?
Well, first things first, let me ask you, do you think that Nvidia is a hardware company?
Well, okay, so they definitely make hardware. However, AI is not hardware, it's software. And if they're dominating, the majority of their market share is because of AI driven forces. So I'm going to say that they are software.
Okay, so interesting. I think that they're just an overall tech company. Like
Okay.
this is so like for example, Nvidia reminds me a lot of Google and also what Tesla is also like trying to achieve also. What Amazon has somewhat accomplished, what Apple is definitely like killing the game at.
Mhm.
What Microsoft has also succeeded at for the most part, but they're more so like software and services. So, I mean, the hardware is kind of like, does anybody really talk about Surface anymore? Probably not. Anyways, um, it's the software in Omniverse that literally powers everything. And if you don't know what Omniverse is, it's pretty much a bunch of like it's their library of software tools that literally support the hardware, that literally like enhances the entire experience, that changes the entire game, that allows you to train things, and then also not only train it, but also put it into motion. That right there is just like next level. Like, I mean, think about it like this. If you think about like, okay, hey, like for example, let's take an OpenAI, right? OpenAI with Sora uses, of course, NVIDIA GPUs to process, and probably also some AMD stuff. But I mean, let's just keeping it within the context of NVIDIA. The problem is, and they're a service-based company. The problem is that they still are like, what is it, $3 billion, $5 billion in the hole, and they've raised like hundreds of billions of dollars. NVIDIA, on the other hand, started off making something and dominating within the graphics chip space, and then now they said, okay, hey, well, what else can we do with this?
Yeah.
And they open up an entire software suite that literally supports it, that opens up the graphics card into something completely different. And when they figured that out, they were like, okay, well, let's put this on, let's see what this looks like on a massive scale. And then essentially the entire enterprise just said, oh, bravo, we will take that. And so then I want 20 of them. So like, that's the reason why I say, like, when someone like Jensen saw the writing on the wall and he seized the opportunity and took advantage of it. And honestly, I don't see anybody really unseating NVIDIA. Everybody else is playing second at this point. Now, there's always somebody that's going to come up later on down the road, but as it stands right now, given what you have, which is a powerhouse of hardware, and on top of that, software tools that can also support. I mean, think about it. They just came out with a $3,000 MacBook Studio / Mac Mini that literally is an AI supercomputer that you can own in your own home.
Which that changes the game, Mark, because it's compact. So this is another marker then, because when the first PCs were on desk, when they became, they went from this large room with all these computers to now all this power on your desk, that is a significant marker in technological advancements. And so now we have one that is AI super powered.
Yes.
See how
so that's what I said. That's what I was telling you before we got on. And I was like, look, listen, if you have to choose between like a desktop machine, like, are you going to choose like Lenovo, Dell, and all these other players, or are you going to like?
You're going to forego that extra cup of coffee.
but you want to know the other crazy part?
What?
Who made the CPU? We know who makes the GPU, but who made the CPU?
I don't know.
Or is there even a CPU, or is it just the super AI chip that literally just powers it all?
I'm going to say it's the AI chip that powers it all.
There you go. So which means that essentially now you just caused disruption within the CPU market. We are looking at the next iteration, the next frontier of what we're thinking about. Like, are we saying that CPUs themselves, CPUs / GPUs, will become one chip, and then essentially everything else is like, okay, hey, like Apple's kind of doing it,
but not at the rate of NVIDIA.
Qualcomm is definitely doing it, but
wait a minute, my face is literally tingling right now. Okay,
exactly.
So this definitely, okay, hold on, let me gather myself, because this changes literally everything. And I feel like the companies that have like a hybrid basis. Yep. So what I mean by that, like companies that do software and hardware, or services and this or whatever, when they have like that like lethal combo, they're usually the giants.
They're unstoppable.
And so
she's like, my brain is going through some things right now.
Right. So so we have NVIDIA doing that. But my question is, who's the next giant that maybe we're sleeping on? Because I'm thinking of a company that maybe
Google can do it. I think Google could definitely do it, because of the fact is they're focused on quantum.
Okay.
And so with they're focused on quantum. I mean, but the problem is that essentially they would also have to like figure out the graphical part, which I don't think that's difficult. I mean, and then on top of that, they already if you really look at Google's entire suite, they can literally put together and they already can put together their entire OS with Android. So, and then something that powers something like that, and essentially like making it available in a supercomputer format with a quantum chip. That becomes interesting.
Oh my
Apple and what that they're like, we've already seen what the success looks like from a
God.
consumer base and also somewhat enterprise base with Apple, in the sense that they have their own custom SoC chip with their M1 or their M series chips. Um, and then now it's like that chip also, like, it shares both the video and the storage as it pertains to RAM. And you see that there's massive success there. So it's not to say that like other players can't do it. And remember what I mentioned, Qualcomm, what they've been doing on devices. So here's a rule that a lot of folks don't know. So Samsung phones in Korea are made with Samsung's own chips. They make their own chips, remember? Like even like some of the tech companies are even thinking about switching over to Samsung to do their chips versus going with TSM. But the problem is you cannot buy a Samsung phone that has a Samsung chip in the US.
Yeah, right.
You have to buy Qualcomm. So all Android devices in the US are made with Qualcomm chips.
Interesting.
And with that chip, it not only provides processing, but it also provides video. But it's just in mobile. It supports mostly mobile.
Now let me ask you this. Okay, so we have NVIDIA out here doing the most, but so if they're breaking into computers, desktops, do you see them breaking into any other consumer type devices like phones or anything?
They could, but I just don't think that that's scalable enough for them as it pertains to like phone devices. I think that as it pertains to like, smart devices, so like powering robots, I can definitely see that you use NVIDIA chips where that's going to be a massive competition towards like the other players, where the robots are fully autonomous on their own. You would definitely look towards NVIDIA as one of the players that's going to step into the fire there. That's going to be the next thing, though. Honestly,
can you talk about physical AI?
Like as it pertains to like robotics, or
well, because Jensen kept talking about, he was like, we've seen the progression of generative AI and LLM, and now it's all about physical AI. And so I just want you to talk more about it.
Yeah, so physical AI is where we get into the conversation of going beyond just, say, for example, what the user can generate, but what also the AI can do for itself. And so a part of that is like, for example, we've seen bots and stuff like that, which is on the software side, but then we're going to start seeing bots in, say, for example, services sectors that are physical, where you also start seeing physical AI through infrastructure as well. So
I think the word physical is throwing me off.
I mean, it could be like cars as a part of physical AI. It could be robotics that's a part of physical AI. It could be like the streets that's also part of physical AI. So anything in which that like literally brings in the tactile touch.
In other senses too, right?
In other senses, that is correct.
Okay, so that's why.
Now that you start bringing in the senses, then now you're talking about AI. Yeah.
Oh my gosh, a new crop of humans.
Yes.
Correct.
Yeah, so the question now becomes, is the AI mania over, or are we gearing up for phase 2? And
I mean,
my thing is, go ahead. Let's
I was going to say, we have to be gearing up. AI is not done. The mania, it can't be done because we haven't exhausted every single thing yet. And if we're talking about physical AI, like what's after physical AI? There's still more to come. Now, the growth of it though is what's going to be, I think there's more story in the growth and how fast we accelerate to these things.
Well, interesting thing that you mentioned that, because we were talking about LLMs last year, and remember during the summit I said it's time for us to move on from LLMs and start thinking about it from the stance of a world model.
And you have to be physical in the world to.
Well, here's the funny thing. Jensen gave you a glimpse of what that looks like. He's actually been giving you a glimpse of what that looks like for quite some time now. And I don't know if people have remembered in some of our intro videos, I actually posted it in there, where it shows a car, a physical car that then becomes a digital car that becomes its digital twin. And everything that that car records, not only just as it pertains to the driving experience of that specific car, but what it takes in from the environment around it, it's able to recreate that environment and then run that across multiple simulations of its own and then learn from that on its own. And then essentially be able to map out the entire space. I mean, you are able now to map out an entire city.
That is mind-blowing.
It is, but at the same token, it's like, and you have to think about the countless amounts of jobs in which that's going to produce, like what type of businesses that's going to open, what type of opportunities await. Like,
it's all future.
Like you have to think about it like this. Like I'll keep it simple for everybody. So let's take robotics, right? Like, because since it's the thing, you're seeing all these robots and everything else. Somebody's going to create something that literally makes them look more human. Somebody's going to create something that ultimately gives them different types of voices. Somebody's going to create a bunch of downloadable content that ultimately enhances the experiences. And it's not just going to be the company that made them. They're going to make it open and available for you to critique or for you to edit, and then essentially make it your own. There's going to be tons of businesses that are going to thrive in that space that ultimately, like, okay, those are multi-billion-dollar businesses within themselves. I mean, if you need an idea of what that looks like so that way you can wrap your head around it, is look at like the gaming space, where it's like, you have a lot of games that are sold for free, but they make billions of dollars, though that the game is sold for free. Well, it's because of the downloadable content. It's the add-ons that ultimately that people that they pay for. But we're in another interesting space, Jolene, and it's not just NVIDIA, like, and I'll just put it out there. I was disappointed in AMD CES keynote. One, Lisa Su wasn't there. And then on top of that, they had a dude up there that was nervous, that he was just like, look, I feel like he just got thrown in at the last minute. Maybe she's under the weather. But it just seemed like, okay, hey, like, at a consumer electronics show, you should also focus on the consumers. And I think Jensen did a very good job of that, though that his speech was a little long-winded. But, hey, I get it. He even tried the whole Thor reference.
He was looking fly. We'll give him a pass.
Yeah, the jacket was everything.
Right.
But the interesting part that I noticed about AMD is they're trying to appease enterprise customers. And the thing is that people need to understand is that enterprise customers are like now priority number one and consumers are priority number two. And the reason behind that is because consumers can change at the drop of the dime, or as the economics change, they can change.
Like you said earlier.
Enterprise customers are led based upon what their set budget is, what their budget allotment is for the fiscal year. And so essentially you're trying to get a part of that pie, or whether it's government contracts that you're trying to land. And so with that, it's like it brings more revenue that literally not only funds your overhead, but also funds your R&D to even further on the innovation as it pertains to scaling. Because of course, your customers are going to want you to bring the latest and greatest improvements. And then on top of that, making it more efficient for their businesses. Consumers are going to want a product that works well, that essentially that doesn't break, and that's something that they can use. And I think that we're at an interesting inflection point, because the best example that I can come back to, of course, is NVIDIA. Now, we're not glazing NVIDIA or anything like that. We're just literally just pointing it as an example. Normally, I would do this if this was an Apple company or anything like that, but this one seems like it fits the most. So when you look at NVIDIA, they came out with their Blackwell chip first, their enterprise chip that they unveiled. And it's like, okay, hey, everybody was talking about, is Blackwell on track? Is it on target? Is it on time? Enterprises wanted it. The orders they were coming up. And then they were like, yeah, we're good.
Like, calm down. We've been done that. We got other things now.
Relax. And so then next thing you know, that same Blackwell chip has now made its way into the graphics card that is now going towards consumers.
I'm just seeing patterns.
I'm just saying, like, I mean, that's the world in which that we're playing in. So essentially, it's like the money that you make, like you're talking about a $1 trillion market, and in order for you to get to that $1 trillion market, you have to go through enterprise. Now, enterprise can sometimes move slow, but they pay big.
Because they have the budgets. But Jensen said that, I think he said, was it, let me look for these. No, somewhere he said something about the next multi-trillion dollar industry.
Mm-hmm.
Was he talking about robotics or was he talking about autonomous
So
vehicles? I think he was talking about robotics, like that whole industry.
the whole industry as it pertains to autonomy is a multi-trillion-dollar market. But then
Mhm.
also the world model, when you go from large language model to world model, that's also a
Mhm.
multi-trillion-dollar industry. So you got to put it from that perspective. And for example, look at
Mhm.
OpenAI. I'll come back to them because they're a startup.
Yes, you
They're
can
not a
talk about
publicly
that.
traded company.
Right.
They're not a publicly traded company, so you can understand that there's levels to this. So what I mean by and what the whole conversation I'm giving you guys today is so that way you can understand how winners win. Like understand winners. I don't want you to understand losers because ultimately if you understand winners then you understand what the other side looks like.
Right. It's like what don't they have? What aren't they doing?
Correct. So what OpenAI has to figure out is how is it that they can get their revenue to a place of scalability? How is it they can get their business to a place of scalability
Mhm.
where essentially it doesn't cost them as much, and then the revenue that's coming in that essentially that okay, hey, it's going to ultimately like be at profit margins that are susceptible that allow the company to grow where they don't have to consistently go through funding. The reason why you see that these companies have to raise exorbitant amounts of capital is because on the other hand they're burning through so much capital at the same time, and there's not enough capital as it pertains to revenue and cash flow that's coming in to support it yet.
Well, you mentioned something about well, AI's well, I call AI's cousin. We talk about Anthropic, right?
Yep. There's
And
$60
60
billion
billion
round that they're trying to raise. Yep.
right. That amount seems wild if they're only software. They're not
Yeah.
so we're talking about these different patterns and the patterns show like the winners have like we talked about two different at least two. So it's
Well,
either
in
hardware
that
and
arena,
software or service.
right? Because look at
Uh-huh.
Adobe. Adobe doesn't make anything of their own. They don't. They make the software, and
Okay.
they are able to leverage that software. Salesforce, again,
Mhm.
software. If you look at, say, for example, Palantir, software. So there's a ton of software companies out there. Whereas, like, if you really think about it, if you do it correctly, software could actually be more scalable and way more and have way more opportunities as it pertains to profitability than hardware does. Because with hardware, you have to think about it. I have to now like come up
Mhm.
with the specifications, then I have to send it through the
Mhm.
supply chain, and then I have to pay all them within the supply chain, let alone my own staff. So my overhead cost is ridiculously higher for hardware versus with software.
It's all
I
ether.
get I just get folks that ultimately like, write the software and then I push it
Mhm.
out there into the ether and then essentially like let my customers ultimately buy it and we just continually just go through these iteration loops and make it better. I mean, my team that I'm paying for, they're already under payroll, so I already know what their cost is. I kind of have my
Mhm.
fixed costs for the year. Whereas with hardware, I mean, look, things can change as it pertains to
Eye
inflation.
shortages,
Look, supply chain shortages.
pandemic.
Listen, so again, it's like, there's massive challenges within each of these landscapes. But at the same token, when you think about like, okay, hey, who's winning at it? Yeah, I mean, it just go and look at their revenues, and their revenues will tell you the story. And wherever you see that the revenues are, is ultimately where you will see that they are pandering to their customer base. So, for example,
It's like,
the reason why you're going to see AMD pandering to its enterprise businesses is because of the
mhm.
fact that that's what their shareholders want, because the shareholders know that that's a very profitable business for them.
Mhm.
The profit margins there are like anywhere from what is it, 40 to 60%, sometimes 70%. Whereas in consumer markets, and especially when consumers are a little strapped for cash, you're probably looking at maybe like a 20%, 30% profit margin. They don't click the same.
Mhm.
So
So
again,
I'm seeing okay, so I'm seeing these patterns though for the winners, Mark. It's like you have software, hardware, or software, some combination of hardware, software, services, for example. If you have
yep,
at least two of those. But
whatever
if
your
you
bread and butter is.
also have an ecosystem
Yep.
built in as well.
Yep. That's part of the name of the game though. Like if you have an ecosystem that ultimately is
Mhm.
so good where everybody wants to play in and they don't want to leave, then essentially you've struck gold. I mean, honestly, you struck platinum or palladium, whatever you want to call it. Um, but I'll give you an example of what that looks like, shall I? And this is coming from every single chip sector. This is coming from most of your chip companies within the sector, but we'll just play with 3.
Okay.
So I want you to look at Nvidia. I want you to look at AMD and Intel. So to make it simple, the 3 chip makers in the US.
Okay.
All 3 of them make their own chips. Like, of course, going through like TSM in some cases, and Intel can do its own. Okay. Now, when it comes to like their CPU chips, like Intel and AMD, make their own. Like, we make our own, we sell our own. Nobody ain't ain't nobody gonna be doing anything on top of it, except unless you're AMD and you got Sony. That chip is still going inside the Sony PS5, and it's still an AMD chip.
Okay.
By the way, Sony car also unveiled, and it also has a PS5 built into the car. Score. Though that I'm not paying $89,000 for the car. All right, so
right, you're gonna be playing no PS5 while you're driving. But anyway, go ahead.
No, you're not. All right, so but here's how the game goes. Now you go to now they make their own. Then they go through OEMs. So all 3 of them make graphics cards. We'll just stick in that. We'll just play in this pond. All 3 of them make graphics cards. Intel's new to the game. Intel currently only makes their own. Nobody else supplies it, so they don't go through any OEM. So they're just like, we're just on our own.
Original equipment manufacturer.
Yes. So when you go through AMD and Nvidia, they work with players like Asus, MSI, and some of the other guys in that space. And then on top of that, when you think about, like, for example, there are chips showing up in other like manufacturers, bring Intel back into the conversation. Every desktop that you see in the store either has an Intel base chip or AMD chip. When it comes to graphics, it'll probably either have an AMD based graphics or an Nvidia based graphics. And who is the manufacturer of it? The main manufacturer is either AMD or Nvidia. But then it's like, okay, hey, like Nvidia just told you what its prices are at base. So for the 5070, it's $549. For its top of the line graphics card, it's $2,000. We'll just say $2,000. You send it to those other OEMs. Now they're going to take that because they just paid Nvidia or AMD for these chips to build these graphics cards, but then they're going to stick their own little flavor on it, and then essentially they're going to sell it to you for like $2,300, $2,400.
They gotta leave us something.
Look, I just paid Nvidia and Intel or AMD all this money, and now essentially, how is it that I come out ahead? So again, it's like that's when you really think about it. The next time you want to go look at, like, if you want to understand what I'm saying, go on Amazon and look up Nvidia RTX 4090 or RTX 4080 or 4070.
Okay.
And you'll see Nvidia makes what is called its Founders Edition, which means that those are the cards that Nvidia sells. Like, those are like, there's nothing else. It just says Nvidia on it. Then you'll see other cards on there that are literally the same exact card, maybe, upscale, tweaked, or whatever it may be. But then you'll see the differences as it pertains to price. They've already paid Nvidia the price. They've already paid AMD the price. So now what you're paying is you're now paying for their tax that they have to cover in order for that to happen. If you buy it directly from Nvidia, then you're just paying Nvidia's tax. Either way, you paying somebody.
Yeah.
But that's literally the name of the game when you think about it. And when you think about it, their customer first is the enterprise customer, aka the OEM. Just like Microsoft, their customers are the OEMs. The customer after the OEMs, the consumer.
Now, as we wrap up.
Yeah.
So are you saying that CES was more so BES? Is that what you're saying?
Yes, I honestly believe that. It's significantly shifted from just the consumer to now talking about enterprise. And it's a place where a lot of them can give their presentations because they know that investors will be watching, shareholders will be watching, and also their enterprise customers will be watching. Now, of course, they try to sprinkle, they definitely give the consumer something, to look forward to. But in the grand scheme of things, like those types of companies, now Samsung, they're going to sell to, they're going to show it to their consumers. Their number one customers are consumers, unless you're going through a department store that's going to carry their product. But at the end of the day, it's still the consumer. If you go to like a CES event for Nvidia and AMD, they're definitely focused towards the enterprise because they know who keeps the lights on. They know that essentially that they can talk about, like, think about it. If they were only talking about the consumer, they would have only talked about maybe 2 or 3 products. That's it. His presentation wouldn't have gone a whole hour. His presentation would have been 15 to 30 minutes. Think about it.
It's just very fascinating.
Mm-hmm. This game is different. Like, and that's what I'm trying to get people to realize. Like, look, there's a game that you know, but then there's the game behind the game that you don't see that you may not know. And that game, that
It's
essentially
powered by
that that too, but it's like that game is way
Mhm.
more powerful. The games that you don't see are the games that are way more powerful than what's playing out in front of you. But the crazy thing about it is both games you see in plain sight. There's only one that you're only trained to pay attention to. You're trained to pay attention to what is it that they're selling and everything else. What you're not trained to see is like, okay, hey, who are they really selling to? Who is it that they're selling it to?
And
Who's the big buyer?
right.
We saw who AMD's big buyer was because they brought him out on stage and shook his hand. It was Dell. For the first time ever, Dell is now putting AMD chips in their enterprise-based computers. It's a long road coming, but it's happening. And
Mhm.
it was just, you know, when a person comes out there in a suit, something's wrong. Ain't nobody wearing no suit unless you're Lisa Sue, and we know that that's part of your brand, like a Janelle Monáe once upon a time when she always wear a black and white suit.
Mhm.
Yeah, nah, you ain't wearing no suit at CES. CES is supposed to be chill. Everybody else is ultimately like supposed to be excited about the products. They ain't excited about no deals happening. They're excited about like, okay, hey, when can I get this in my hands? CES is the event of like where every tech enthusiast or every electronic enthusiast is like, okay, hey, I see the most bleeding edge tech. Some of the tech is just far fetched, and it's like,
Mhm.
okay, hey, take my money. Now it's
Mhm.
enterprises saying, take my money.
Take my money.
So when we think about like what the growth looks like, is AI mania over? No. Are we getting a little phased out by everybody saying AI as the buzzword? Yes, we are tired of that. Are we at the point now where people are going to start looking for results of what was being said? Yes.
Mhm.
2025. If if
Feel me.
if Cat Williams was telling everybody that the truth is going to get loud in 2024,
Mhm.
2025 is going to be like, okay, I'm about that action now. Yeah, it's about that action. It's going to be about what is it that you can prove in 2025.
All right. Well,
All
there you
right.
have it. Mic drop. Okay. Great.
I know
Well,
I
you
went
know,
full geek out, but you know, hopefully everybody can read the tea leaves and everything else. But you know, all right. So when's the next time that we're doing this?
that's a good question. It's a very good question.
To
January is one of those months. I'm just kidding.
to be
Um,
determined.
all right, let's look at the calendar while we have it here, y'all. Okay, so we have. I mean, in theory, we could be back next week. We could be on
Just
the
flash the
14th.
signal. Just flash the signal in the sky. You know where I
You
am.
know what? I think it's going to depend on how many people are liking the video,
Yeah,
subscribing. I think that's
yeah.
what it's going to depend on if we come back next week.
I have to give him credit though. 85% of the folks who watch the come up series are
Mhm.
subscribed.
That's
That
dope.
other 15% though, you got issues, dog. It's free.
Is she true?
No, but in the
Right.
real, yeah, I mean, we'd love to see the channel grow. And so if you can, send it out to some folks in whom wish that, you want to talk to them about the tech space, you want them to understand exactly what's happening, send this video to them or send one of the other videos to them. I mean, yeah, so what are we saying? If this gets to a certain X amount of likes or something like that, then essentially we'll do it Tuesday, or
Yeah.
what's the plan here?
Let's go with that.
Okay. Well,
Let's
I'll
go.
let you set the arbitrary number and post it on
All right.
social,
Let
and
me
I'll
roll my
just
dice.
co-sign it.
Let's roll the dice. Let's get it to. I don't even know what our normal like rate is, but let's get it to. I don't know, 500 likes. Is
Sure.
that all right? 500 likes, and we'll be back
All right,
next.
500 likes, and then we'll be back next Tuesday. And every week that you want us to come on for the following week, we'll just increase the pressure until
Yes.
all 85% have watched the video. Jolene, thank you so much for allowing me to geek out post CES. It was fresh on my mind. I know that there were some things that I didn't get to really talk about, but I tried to loop them in as much as I could. Like, for example, corporate debt and those types of things. But if we're doing it next week, it may come through as a bonus next week. So
yeah, and that is actually really important. That is a part, that's a central part of the landscape. So if y'all want a key part of the landscape that we didn't get to cover today, hit that like button. But it's not dinner time, but I am hungry. So
well, I've been drinking water.
At least.
I had some Danishes before we went live, so I'm good for now. But I'm about to go watch these Lakers play.
All right.
Have a good one, Jolene. Hopefully, I'll see you next week.
We'll see. It's up to the cousins.
Until next time, I'm Mark Monroe.
And I'm Jolene GC in the place to be.
And this has been your come up. We will see you next time.